The changing landscape of the housing market in Las Vegas requires a real estate professional that understands how to get your offer accepted, willing to go above and beyond for service and accountability. Hi, my name is Dan French. I've been in the real estate and financing industry for over 13 years. Most real estate agents struggle with answering their phone. Please call me directly, 702-557-6176. I'm available for all your real estate needs.
Dan's a fantastic man. He really is.
Ladies and gentlemen, please welcome.
And what's going on, everybody? This is Dan French. This is the French Workbench podcast here on a Thursday. And we have a full guest. We have a lot of guests in here, a full studio. I got my man Rob back here. And if you guys don't know behind the scenes right now, we're the most real behind the scenes information regarding financing, real estate, money talk, entrepreneurs happening here in Las Vegas. I'm your host, Dan French. And I have a couple of guys here I want to introduce, and also my guy, Rob. Rob, what's going on, buddy? How are you?
Good, thanks.
How's life,
man? I get a kick out of your show here. It's fun.
It is fun, right? You love it, don't you? I mean, you love coming on and giving your take and understanding what's happening over here. Giving the Las Vegas market an update, right? He's like, yeah. So, what's going on? Anything new for you, or anything new happening in your world?
Markets have been very interesting, can say the least.
Yeah,
definitely a trader's market when you have one day up, one day down, one day up. So investors probably feeling a little bit seasick, but for trading, this is what we want. We want elevated volatility, and so many products to choose from nowadays that it's really a trader's paradise. But it is tough to compete against algos and high frequency and things like that. So you got to be pretty sharp. I mean, it's not an easy game, but volatility certainly helps.
Yeah, we're going to talk today about a couple things here. I want to bring up that we're going to speak on inflation. We're going to talk about what's happening with the stock market, and we saw a big drop a couple days ago. And then I want to introduce my other guest here. This guy, he's come all the way down here. Matt, cryptocurrency guy. You do a lot with cryptocurrency, right?
Yeah, I'm a realtor out here in Las Vegas.
Okay.
I also have been, I personally don't day trade or do any of that. I mean, I mess around here and there, but I've been invested in crypto for give or take 5 to 6 years at this point.
Right.
Yeah.
So, I mean, I think, you look at the situation here, and cryptocurrency is obviously people want something else, right? Mm-hmm. They want to invest. You got Rob, he's talking about stocks and things, and that's still an option. We're going to talk to him about that. But crypto's really come around, but we're kind of in a bear market, right? So, I mean, you're starting to see, right?
Yeah.
Big time, right?
Definitely say so. Yeah.
And so I want to also introduce my guy here. His name is Blake. Blake, what's going on? Or Jacob.
No,
I don't know why I said Blake. Jacob. Sorry, Jacob.
Hi.
What's going on, buddy? How are you?
So, I've been involved in cryptocurrencies for about 7 years now. It was actually my first start into finance and how I got a little interested into it. So
what do you do out here, Jacob?
I just live off of crypto right now. I do trade a little bit as well, so I have a trading friend here as well. I'll trade when the opportunity presents itself, but also,
So you're a day trader too, or?
Yeah, I don't know if I would define it as a day trader, but yeah.
You just watch the markets?
Yeah, I'll watch the markets, and I will swing trade a little bit, but
okay.
Yeah, but it's what I do full time now, and enjoying life, traveling around, and living every moment as I can.
Living the dream.
Yes, sir.
So let's talk a little bit about what's going on here. This is, a Thursday show that we're bringing on that's going to talk a little bit more on currency, right? Cryptocurrency, currencies in general, and also what's happening in the lending world. So that's why I'm bringing on Rob here. So Rob, I want to talk with you, man. So talk to us about what happened a couple days ago and why you think the stock market had some issues that you saw in the news.
Well, I don't think that it's completely over. We're not out of the woods. There's a lot of contributing factors. It's not just about one thing. But I mean, we still have 40% of the S&P stocks are, above, let's see, they're the average, above the 20 PE. So there's 38.2% of the S&P growth stocks are above a 20 PE, and we only have 16.5% that are below a 10 PE. So that's PE is price to earnings ratio. So of course, stocks can gain in their book value by retaining earnings and so on if they actually make money. So you have to separate all the ones that are speculative from the ones that actually earn money and pay dividends and things like that. So there's this tension between value and growth, but we are coming down from elevated PEs across the board, and I think there's still room to correct. Again, you're going to have, when the markets go down, they bring out all the bears on the television. When the market goes up, they bring out all the bulls, and it's convenient, but it's not necessarily helpful for people. So historically, you get a lot more interest if PEs come down to below 20 overall, maybe in the, somewhere in the 15 to 17 range. So we still got a ways to go to achieve that.
So let's talk a little bit about the psychological effect it has on people when they look at the stock market. What would you think that the average person probably doesn't know what's going on? What is the percentage of the population actually deals with the stock market or knows what's going on in the stock market? Because I think it's more of a psychological thing, like, oh, it's bad, that means the economy's bad. But it's not, that doesn't really mean that. That's just a very short window of something that's occurred, right? I mean, so I don't think a lot of people really understand, like, oh, well, they think, well, you see these bad numbers, the economy is gonna tank. It's gonna go, the economy is gonna suffer.
Well,
and so explain, like, what is the psychological effect?
There. You do have a point there, because, there is a wealth effect. And, if you're feeling pretty flush, you probably can go and like, as Jacob said, live the life, enjoy your life. And if things are getting tighter for you, and especially if you're seeing, your investment accounts decline in value, you're going to start to tighten up. And the more people that tighten up, it becomes that self-fulfilling prophecy, right? It's no different than what causes a run on the bank, and that's kind of what we had in the crypto this last week, is a bit of a run in Luna and so on, UST. So so the same process happens when you're feeling, not as flush with cash. You're going to tighten up, and your neighbor's going to tighten up, and so on. I mean, it'd be interesting to poll your audience and just see what changes they have made in their life regarding, instead of making multiple trips a week to go do errands, maybe you compile it all into 1 week and get a multitask. Maybe you don't buy a name brand and you buy some no name brand, right?
Yeah.
I mean, what changes do you actually make when things are getting tighter? And
that's the thing, right? Yeah, I agree. I mean, what changes do you make? I mean, so do you even look at it and make a change, though? I think that's the question, because I think a lot of people look at it and go, well, it's not going to affect me because I don't really deal with the stock market. I know the economy's not doing well. So what is, the average person out there looking at, stocks or the numbers are going down? I don't know. I mean, does it really have a psychological effect on people where they hold back, like they don't really know what's happening, but they're like, you know what, I'm not going to invest in anything, regardless if it's stocks, crypto, anything.
Well, the same could be in any asset class, whether it's art, rum, whether it's NFTs, whether it's crypto, real estate, stock market. Humans do this. When something is going down, they want to hold off because they think that it's going to go down further, right? So the problem with deflation is, like, if things are deflating in terms of purchasing power and so on, you're going to hold off. If your investment is declining, you're going to hold off. That's what people typically do. The other argument is, you got to buy when things are on sale. You got to buy when they're cheap. But that's something that you have to force yourself to do, and you have to have the ability for disposable income that way, and you also have to assume the risks that come with that it could continue to go down and you could lose more money. So So it's a very tough challenge. Typically what we see is that when things are going up, the fear of missing out causes people to trip over themselves to try to get in.
Just like the housing market here. I mean, that's what you see with this. You see with, I mean, I remember back when crypto was going crazy and Bitcoin was pushing, 70,000? You guys can, I don't know, 75, something like that, right?
It was close to 70. I think it was 68 or
Yeah.
69.
Hit 70.
Yeah,
But never hit
was
that.
close to that.
People were like, hey, I got to get in at all costs. And, you look at it now and it's like at 30,000 or something. And so people thought they were going to miss that. So does that have the same psychological effect? I don't know. As far as when things go down, should I wait for the dip? Everybody always says that. So I don't know.
Here's the thing. People in the crypto space often criticize Warren Buffett, so on, for his old school way of doing things. But he had a discipline in the sense that the investment had to meet a certain criteria, and that's a lot of what investing is about a disciplined approach, about having a framework and calculating, your risk adjusted return from that investment. You need something to lean on. And the two worlds don't necessarily agree, but the principles of disciplined investing are definitely there and need to be adhered to no matter what you do, crypto as well, right?
So what are you seeing this week? Because we try to do it on a week to week, situation. Is there something different? Is there something happening in the news that's caused some of these things that you see with the drop of all the,
I mean, you normally have a tech route, but you don't necessarily have a consumer staples route.
Right.
When you say that Target, for example, has gone down more in one day, you have to go all the way back to 1987 to see that kind of, punishment. And we've seen it stock after stock after stock. And so it's not just the tech stocks anymore. They're taking out everything and shooting it, right? So, this is going to disturb a lot of people, and they're going to assume that, we're going to go into either stagflation or a recession. I mean, that's
what do you think? Do you think that's a possibility? Is that on the table?
I put it this way. When you have some of the forces that are in play, they're kind of like genies that get let out of the bottle, and you really don't know what that genie is going to do once it's out of the bottle, right? It may grant your wishes, it may not, but it's going to be a shit disturber, right?
Yeah.
So there is a lot of stuff that's bottled up and a lot of systemic risks. I'll give you an example. Not that it's a major economy, but Sri Lanka is at a point of default. Now that would take many months to work out, many years possibly, reorganization, all kinds of things. But what's the next shoe to drop because of these systemic problems? And we've got a lot of them. And the market may rally one day, and it might give that false sense of a bottom is in, we can get back to doing what we normally do. But that's not what I see. The sentiment is very, very different. When you take away the punch bowl and, they're taking a fairly hard line, not as aggressive as Volcker back in the 80s, but they're taking a pretty hard line against, we are, committed to reducing inflation. And really, we don't really care whether you guys in the stock market want to bail out or not. We're going to stick to our guns. So that punch bowl is taken away, and that's going to affect many asset classes. Right.
I think it already has. Like, I'll give you. So, look, I mean, every asset class, every investment that you could think of, it's all suffering.
Real estate.
And real estate. Well,
That's
I
the
guess
only thing I've seen that hasn't been.
Real estate's just starting though, because you've got the existing home inventory is up 5%, and that's a pretty steep curve. So it doesn't take long where people go, well, wait a minute, if things are starting to roll over, and this may be the chance that I get to sell. And then you start to see more and more inventory combined with rising rates, and now you've got things really slowing down. And that's not what we had over the last 2 years. We had low inventory and people wanted homes.
Yeah. So, but look at it like this. So in the lending world, right, rates have gone up. You look at crypto, that's come down significantly. We're in a bear market, continually going down. You look at the housing market, that's somewhat started to peak, and we're starting to see it soften a little bit. And then you look at the stock market, and it just seems like it's going through the same process a little bit, where you're starting to see some numbers and people pulling out. I think the confidence is just not there overall in the economy right now, and I think everybody's just staying pat.
And that's part of the problem when you get a buyer's strike. Okay, so if you kind of look at the put and call scenario, like really a put should be worth more than a call, because as things decline, liquidity decreases, right? So when there's a buyer's strike and there's not as much volume going into some of these issues, like I see the volumes on individual stocks dropping, the ones that aren't sort of in play. Like if something's in play, like either going up or going straight down, volumes, have increased on those particular things because everybody wants to get either in or out. But on many of the other stocks, the volumes are drying out. And so when you have a buyer's strike like that, it can go further. Like I always have two scenarios. We could transition from where we are to the roaring 20s, okay? Or we could continue to correct. And my target on the SPY is at 389 right now. My target would be somewhere around 340, 350.
What's an SPY for people that don't know out there?
That's the Standard & Poor's 500 index tracking stock, which is an ETF.
Okay.
So, if you wanted to avoid paying mutual funds and stuff like that, their fees, and most of them underperform the market anyway, you could just go in and either buy the Dow or the Nasdaq or the S&P 500 through their ETF.
So
you're essentially owning the market. You're doing investing for yourself. You own the market. You're in control. So we've always recommended people to get educated and really, use the market ETFs as a way to invest. And so now you would obviously be, wanting to protect. And there are inverse ETFs that you can use to protect your downside. If you have a whole bunch of stocks right now, like say they're Dow stocks or they're S&P stocks, you can go in and buy an inverse to protect yourself for the downside. Now, it won't be perfect because the stocks themselves might have worse performance than even the index does.
But you won't lose as much, right? Is what you're saying?
You won't lose as much. So, you could have a portfolio of 20 stocks, and with one click, you could hedge it if you had the capital to do so, and really insulate yourself from further downside. So people do have more control than they realize, and you can even do that because you can buy the long inverse. You don't have to do it in a margin account. You can even do it in a cash account. Right?
Do you feel like a lot of people are buying stock though when they buy it? It's more of a luxury position to be in, because you have a lot of people just struggling to put food on the table, right? Inflation's going crazy. We're going to talk about that in a second. And then you have people that are saving money. They're not going to do anything because the confidence, it all comes down to that consumer confidence, if anything really, because just like crypto, you have confidence in that product or crypto, people are going to invest. With the stock market, it could be the same, right? Where people don't feel that money should be allocated to something like stocks, even though it could be a great time to buy something if something's, tumbled or whatever. Let's say a big stock tumbled and it might be a good time to get into it. They might think secondly as far as maybe I shouldn't put my money into that stock because I still got to hold on to it, and I'd rather save it for something else than risk it in a stock market. I mean, are you dealing with those types of people right now?
Well, yeah, but I don't have customers. I just I just look after traders. But
well, how about the traders?
Yeah.
I mean, are they thinking the same psychological thought process?
Well, traders are whether they're trading long or short, they're just looking for opportunity to move with what the market's doing for the most part.
Mm-hmm.
They're not buying something and hodling, really, right? That's not what traders really do. Investors do that,
right?
But traders are more flexible, and even even investors with inflation and all the macro influences we have globally, with the volatility, they're actually having to shorten their time frames and do more adjusting and gymnastics in the markets, which they normally don't like to do. But I mean, we've got so many different things to consider these days that haven't been there for years,
Yeah.
if at all, some of them.
Hold on one second, Rob. We're gonna have to do something here real quick. So I'm gonna come over here real quick and talk to you real quick, Matt. I want to talk to you a little bit. So let's talk about cryptocurrency and where you see it's at today.
The way that personally, I feel like a lot of people who've been invested in crypto for a long time and have like diverse portfolios probably had to make some like very big decisions the past few months. Personally, I've made quite a few, like something that I personally did myself just to stay sane. And I recommend every investor and anyone who's currently into crypto to do this.
Yeah.
Is, get a piece of paper, write down every single investment and every single coin that you're in and put a confidence level right next to it from high to low. It's low, medium, high. Anything lower than high, you should just sell. The way that I look at it, the way I keep myself sane is I sell anything that I just do not have high conviction towards and consolidate it all towards the tokens in which I feel comfortable holding throughout, a bear market.
Yeah.
Just not to do any irrational or panic, selling, irrational decision making or anything of that nature. As far as where the market is currently when it comes down to crypto, I mean, I feel like nothing necessarily has really changed. It's still, dramatically technology and crypto and everything in crypto it moves a lot faster than, the normal market when it comes down to like advancements and new things coming out when it comes down to DeFi, NFTs, liquidity providing, new DEXs and all the new features that they're coming out with. There's all kinds of stuff that is consistently like Jake and I, for example, we're really into this one project called Chainlink.
Yeah.
We actually used to be Chainlink community advocates, and we used to host like group meetings and teach people about crypto and kind of just give them a basic understanding of what it is and what Chainlink does as well.
So what does it do? What does Chainlink do?
Is an oracle. So Chainlink practically just brings real-time information and feeds it to the blockchain so that the blockchain can use it.
Yeah.
So like an example of this would be there's a decentralized insurance company, right? And this insurance company is giving flight delay insurance, right? Let's say the flight does not leave on time, right? And you are delayed 2 hours and you bought insurance for it.
Right.
How is the blockchain going to be able to know? How is Ethereum? How is anything going to be able to know whether or not that, that flight left late or left on time? Mm-hmm. So essentially what Chainlink would be used for in that case would be providing that information to that, decentralized insurance provider to allow them to actually execute that contract on whether or not. Another example would be, what's the weather today, like farmers insurance, right? Let's say this piece of this piece of land hasn't received rain in God knows how long. The blockchain would never be able to know that information unless Chainlink pulls that information from different APIs that actually already provide whether or not there was rain in the area.
Right.
So then once again, with that information, you can then execute, some kind of smart contract or some kind of insurance claim or even a real estate deal of some kind, right? Let's say, did the home inspection take place or did it not take place? So
you're into real estate too, and you're
Yes.
also into crypto. What made you get into crypto? Why do you enjoy it so much?
I got into crypto before I got into real estate.
Really?
Yeah. I've been in real estate for coming up on 4 years, and I started crypto when I was like about 18, like 19 years old.
Do you have a bigger
college.
passion for, let's say, crypto versus?
Absolutely.
Do you really?
Yeah, 100%.
What about you, Jacob?
My passion for crypto?
Well, just in general, what do you do, and what is your passion? Like, what do you do for a living? I mean,
my living right now is purely strictly crypto and trading as
really?
well. Yeah. And it's been that way for close to 2 years now. I've been able to do it. Of course, the bull run helped a little bit. Of course, I'm also just sitting on some capital right now, waiting to re-enter the market. Like we talked about before, there's a lot of fear. There's a lot of panic. I think the macroeconomic situation is a little scary right now for a lot of people. So
yeah.
But in terms of what I do right now, I take this full time. I love it, and
Let's talk a little bit about what people are looking at with crypto and like where it's at and how it all kind of works. So I think a lot of people just start to jump in. They don't really know. Like some people understand what crypto is, but what is crypto for the average person? Like, is it something that it's a way for you to make money, or is it a way for you to store money, or is it a way to hedge against inflation, or just to get out of the hole? You know what I mean? That's what
it's
people.
like a casino to the average person.
I mean, there's a lot of different ways you can interact with it. I think it would depend on who you ask. So it could have many different tools, and it can help you in many different ways. I think, some people in this market, they only strictly focus on Bitcoin, and a lot of them see that as certain hedges to maybe inflation if they want to see it like that, or they might treat it similar to gold. Some people view it as a different way of interacting with money. So you can have, over collateralized loans and transfer money that's a lot easier that you could find in traditional finance.
Yeah.
And then there's other people who treat it a get rich quick scheme as well, which
is there a get rich quick scheme like that? Can you actually invest into something right now in this market?
You could, good luck with it, I guess. I mean, that would be my advice to you. Yeah, it is. So, you could treat it like that. And I've heard stories as well of people getting rich, insanely rich very quickly. And, I wish them nothing but best of luck. But, I think where the crypto market stands today, I think, I would maybe disagree with you, Matt, a little bit that the innovation is still coming. I think the innovation in crypto kind of took a weird turn about a year ago. I think we were seeing a lot of innovation about a year ago with new loans and lending services and Aave and way to earn interest, borrowing your crypto out to other people. I think those were really cool, interesting ideas. And I think somewhere along the way, the market sort of took a turn and got focused on NFTs a little bit. And I don't think there's anything wrong with NFTs. I think they're great. I think they can accomplish a lot of great things too, but I think also what they were accomplishing in the past year, a lot of it was sort of treating it like a casino. So I think the innovation has kind of gotten stifled by, where the volume and liquidity was going in the market for the time being. So
yeah, 100%. I was going to say, a lot of people don't understand all the jargon, right? Because it's a lot of technical information out there. But as far as like crypto and like how it helps people, the average person, you got to be into it. It's almost like you got to follow it. You got to be into it, because if you're not, is it really an avenue for people to say, hey, I'm going to invest my money and make money at it if you're not into it? Or is it, because a lot of people think, I'm just going to put my money in there, I'm going to get some type of return.
Yeah.
That's not necessarily the truth,
Not all the time. It is a very volatile market too.
Yeah. Sometimes that's the case.
Sometimes. It's very speculative. Even now, it's still, it's less speculative than it was maybe 2 or 3 years ago, but even now it's still a very speculative market. And there's a lot of volatility to it as well. It's much more volatility than you'll see in stocks. So, my advice to you, like, you're just someone who, doesn't want to get too involved into it. If you wanted to maybe allocate 5% of your portfolio in a Bitcoin or Ethereum and then just let that ride for 10 years, I think it's hard not to justify at least 5%.
So you got to really just kind of go into it and say, hey, I'm going to invest money and not look at it. The question too is, why is it tumbling so fast right now? Why is it there's no confidence in the crypto space?
So, because I think like largely in due in fact that it's a speculative asset. So when we're seeing, when we're witnessing the macroeconomic events that are currently happening, I think there's going to be a lot less investor confidence to buy speculative assets. So, we have that, along with, it kind of was with the whole inflation, a lot of speculative assets were blowing up. So we're seeing a bit of a cool down with that. And, we kind of had a black swan event. It was a double whammy that caused price, with the whole
with the Luna UST.
Yeah, UST
was that strategic though? I heard that, and Rob, you can chime in on this, but I heard Luna was strategic, right? Right? Because
there's conspiracies around it, but Citadel and all the hedge firms that are being like blamed for this, they declined all the claims. They're declining everything that they had anything to do with the depegging of UST and like the takedown of Luna. So.
What are your thoughts? What are your thoughts on it, Rob? You follow crypto a little bit. Do you know what's going on with it?
Yeah, I have some insights into what happened there. I have some whales that I've talked to that, were involved to some degree. I can't really elaborate any more than that. But this whole thing about a new finance system, new banking, that UST was going to be the be all end all, and it was all algorithmically based. So I think I think the moonshot got way ahead of the reality, and I think that there was some accountability that had to be addressed. So that's about all I can say. It is a bad shot for a lot of the other cryptos though, because everything gets dragged down with it. But I USDC is a stable coin that has been more extensively audited. USDT Tether, we can see what they hold, and there's 45% US treasuries and other things, but still it's still a little bit opaque to me in terms of all of their holdings. So I would be a little bit more concerned about US dollar Tether than I would US dollar coin. What's your guys' thoughts, Jacob? And you guys have any thoughts?
I mean, I would agree with that totally. So I would have most confidence in USDC because
what is USDC? I think a lot of people don't understand what that is. So kind of explain that in more of a general term of understanding.
Yes. So it is USDC is a stable coin. Is it created by Coinbase? I can't recall now.
Is it?
Yeah, so it's Coinbase.
The Coinbase product.
Yeah, Coinbase is stable coin, and Coinbase is always very open, and it has been audited many times, so there's a lot more confidence in that. Something like USDT, they're a little bit more quiet. Although I think they released something today actually stating that they had $81 billion in reserve, which sounds like bullshit to me. But sorry,
no, it's all cool.
Okay,
well, but I can rattle off the USDT.
Yeah,
right. It's got 55.53 in U.S. Treasury bills, 5.81% in cash and bank deposits, 9.63 in money market funds, and 28.47 in commercial paper and certificates of deposit. And then there's some other stuff thrown in there. That's the most transparent that we've seen ever from them, since the inception of this thing. So they've had a lot of pressure and a lot of requests for stuff like this, but the auditing is done out of the Caymans, so who knows, right?
I got a question on something. So I had clients that I work with, and both real estate lending, they in contract, right? And they had 401k. The recent news that's come out, not just a couple of days ago, but they lost like a lot of their money in the stock market. Okay, and then they're going, well, when you see these things and the confidence that it brings onto people, and the lack of confidence that it comes with it, I mean, do you just stay in and you say, okay, hopefully it comes back? Because I think that's the big thing is when you see big hits, we know it's going to be jumping around a little bit, but when you see big hits like that and you lose a ton, it really just leaves a bad taste for people to continue to invest into the stock market or keep putting money into their 401k, right?
Well, and a lot of people actually do sell on the way down. I mean, we've seen this movie before, and it's like you start to get day after day of really bad days and they can't take it and they just blow out. And then the problem is when you do start to come back, they're hesitant to get back in. And it'll
100%.
It'll have to come back a lot before they get back in, which means they're actually selling low and buying high, which is not really what you want to do. But this is the human condition that we deal with. Finance is not always convenient, and it's not necessarily, ordinary logic. It has its own set of logic, right? It has something that you have to learn in real time.
So the person out there though that's lost their money, how do you convince why is their mindset, right? How do you say, well, I'm going to hold on to this and not sell though? Because you got to think that
You have to have conviction.
yeah, you really have to have some strong withstanding of something like that, where you're like, you know what? I believe it's going to come back. I believe this thing's going to turn, and because you lose half of your chunk of 401k. I'll be honest, I'm probably not going back into it. I mean, that's just me, right? I'm probably like everybody else, but you're looking at these other people, these traders, right? And they're like, hey, you know what? We'll just move it here to move it here. So you got to have that. You got to have the knowledge to understand how to maneuver, and a lot of people don't. It's 401k and that's it, or nothing else, or it's the cryptocurrency and that's it. There's nothing outside of that says, oh, well, I'll just move this while this is going bad. this will just kind of hold me down for a while, and then I'll go back into it when I start to see a little bit different numbers, right? So explain that to part of it. I mean, why do people do that, and why do they not stay in and wait for it to come back?
It goes back to what was talked about, conviction and really knowing why you're in something instead of just listening to a talking head and that's a great idea, I think I'll go in that, and I've heard so many of them capitulate in the sense of they say one thing one day and then they say a totally different thing the next day, and so people need to invest in what they know, or they need to educate themselves so that they do start to know, and take it small and with a real disciplined approach, and outside of that, just going in because somebody said, hey, you can make a lot of money doing this. And I think a lot of people have been dragged into this, APY farming thing too in the crypto space. That was one of the problems with Luna and the UST was the anchor protocol, paying you 20%, annual return. And there's some way worse than that. If you go look at, the
So that's
yields,
bad. That's bad.
Just sort it by coin market cap or whatever. Just sort it by yields.
Yeah.
There's some that are like, 1,000,000% annually. Well, there's very small dollar amounts in there, but like there's some real craziness out there. And you got to understand something. Let's go back to Bernie Madoff for a minute, right? Why did his house of cards fall apart? Why did the Ponzi scheme fall apart?
I don't know. People lack of confidence, and people found out that what?
No. He had redemptions that he had to address.
Oh yeah, it was brought
why
full.
Why did those things come about? Was because we had the market starting to melt down. There was a lot of
people pulling out, wanting to get their money, right?
Other things that came out at the same time, right? There was other Ponzi schemes that were addressed as well. So when you have the markets correct significantly, we see who has no clothes, right?
Mm-hmm.
We see who's standing there naked. That's what ends up happening, and you're going to see that now, and we're not done yet, because when something has a problem, there is a ripple effect.
Yeah.
And we've had inflation, we've had supply chain problems, we've had regulatory issues, we've had war, and it just goes on and on and on. So from all of that, there's a pressure cooker, and things still have to come out of that. Just because even if the stock market was to turn around and start rallying, doesn't mean we're done with all the issues that could happen yet.
Mm-hmm.
So just remember, what caused Bernie Madoff's problem was the market started heading down, and then there was redemption calls. In a sense, people wanted to pull their investment back for whatever reason, but he had a problem, and you're going to see that with all this APY farming that's completely insane. Anchor is just one example of that.
Let's talk about what's going on with the crypto side of it, right? So I want to say this. So you see these people buying out when the crypto started to plummet. We saw that, and we see that a lot of people are not probably getting back into it anytime soon. But you have people that are out there that are holding on to it and saying, "Don't sell, don't sell." Would you sell? Like, what would you do with that?
Right now?
Yeah.
I am not selling.
You're not selling.
I'm just yield farming right now. That's all I'm doing. I was messing around with NFTs for a little bit, and I was like somewhat successful in that for a good amount of time. Like I messed around with the apes a little bit. I was able to get the airdrop there, which was really, really cool. Airdrops is like a really good way of making like some money in crypto. All you have to really do, it's kind of like a hit or a miss, and I wouldn't even say like you should put all your buckets into trying to be a part of airdrops in crypto, because you kind of, I don't know, like with this one, with the ape one, I had no idea it was coming. It just came,
So the NFT side of it, let's talk about NFTs. So why are they valuable? And ownership. And what is the purpose of an NFT for people out there?
I only give NFTs value because of ownership. I also look at NFTs almost as like a brand company, almost like, let's say, Adidas or Gucci or Gap, for example, right? Like Gucci is clearly going to be, or the Louis Vuitton is clearly, the Bored Ape Yacht Club. And they've defined themselves as that.
They've gone now. They're at that tier.
Right. And these pictures are profile pictures. So people are using them as social identities online, and they're building brands and companies and all kinds of things around, around this picture of an ape.
How does that work? So you got an NFT of a picture of an ape, right? Yeah. And then you're saying they're building all around it. How does that work where you got almost like a community building around that one ape?
It's like building a tribe. It's like tribe building, or like almost like essentially, like you
take me down the process. Well, take me down the process of how that happens though. Like, so somebody creates an NFT. Okay. And then somebody comes in and sees you, right? And says, hey, I want to add to this, or I want to be a part of this. Is that kind of how it works? Or how do people build around that, I guess is the question.
A collection is made, right? So a collection of, let's say, 10,000 images with different characteristics on each image, right? And they're just slightly different, right? But you can tell the difference between each and every single individual profile picture, whether it's a hat or a pair of glasses or different color eyes or a different, style of shirt.
Right.
Some of those are rarer than others. Maybe there's only one of that one in the collection. But essentially what they do is they create a community of people who genuinely maybe like the art, join around it, or like the idea or the movement or whatever the purpose is of that community.
Of that NFT community.
Right. Uh-huh. They all join in, they purchase the NFT if more people like it.
So they purchase the NFT from the person that created the NFT to be a part of that community?
At first, they're minting the NFT on the Ethereum blockchain. So there's a minting event and it causes huge gas wars because every single transaction in Ethereum requires, you need to pay gas, right? So when you have 10,000, 15, like thousands and thousands of people, for example, the most recent one was this virtual land that was released by Bored Ape Yacht Club called I think it's Metaverse. No, what do they call it again?
By Yuga Labs. I can't remember. I'm not following it closely, honestly.
Yeah.
It's a virtual piece of land that they airdropped to all Bored Ape holders, pretty much, and Mutant Ape holders. So they airdropped a piece of land to everybody. And essentially what it was is there was a minting event where I believe 250,000 people signed up. There was 100,000 available, right? So clearly what's going to happen when you have 250,000 people trying to get, a supply of 100,000, there's not going to be enough for everybody.
Yeah.
So essentially what ended up happening, Ethereum's gas prices blew up to like all-time highs, something that people were paying like hundreds and hundreds and hundreds of dollars to like send money back and forth between wallets. I
think it's just hard to grasp from the average perspective, or the average person's perspective, because it's just like stocks. Like, it's the unknown. It's not really talked about, and you have to be in the space or in it, have guidance, have people. So it's just really what the whole purpose of talking about this is, so people can get an idea about there's just another world out there, and there's a whole community of things that's going on that have talking about online, or you're talking about the computer world, where it's just these things are just completely different than what we know.
Absolutely.
And it's just amazing. Do you have anything else to add to that?
Yeah, well, so NFTs, it's been wild for the past year or so. There's been a lot of shenanigans too, and I also agree there's been a lot of shenanigans with yield farmings, and I think, if we do enter an extended bear market here, I think a lot of that will get flushed out, and I think overall that's pretty healthy for these markets, and I think we're going to see a lot of flushing out of NFTs as well. I think, I want to be careful here too. I think NFTs can do a lot of cool things, for finances, and I think there's, it acting as sort of a new medium of art is also pretty cool, but I see it, kind of existing at the right time, at the right place, and kind of creating a perfect storm, really. I think a lot of people were stuck home in COVID, and I think it sort of created this bubble, right? So I think there's, a bit of truth to like the usefulness of NFTs and the value behind an NFT, but I think the narrative behind that truth got stretched out a lot, because I think, everyone had a lot of money to play around with, and I think, there was a lot of money being thrown around in NFTs, and, I think if you were around in crypto for 2017, at that time, it was the ICO bubble, what we call the ICO bubble now, where you were making new coins off of the Ethereum virtual machine. And I think, there's a lot of parallels to the current NFT market to the previous 2017 ICO bubble a little bit.
Right.
So, I mean, I think there's definitely some value there. I think, like I said, it was a perfect storm of, you know, during COVID, everyone's stuck at home, and it gave people like a cool opportunity because, you know.
So like when you look at crypto,
Yeah.
and you look at a lot of this stuff, and you can talk about it too, Rob, but it's more like this. It's like, you know, people think it's going to be the new wave of currency. But you talk about it and you think about it, and everybody's creating these coins, and it almost sounds like almost like gold and silver situation where you have bullion versus, you know, the traditional coins or the you know, the more minted coins of things that, you know what I'm saying? So, I mean, is that because it's just weird how you can create one coin and it just goes crazy, and then other things you do, is that something similar to that, you think?
Yeah, I mean, there's some similarities to it too. You know, I mean, the big deal now is utility. Is like what coin, what utility does your coin provide? Yeah, I think that there's a lot of that too. I mean, unfortunately, like I said, I think there was a lot of innovation about a year ago. The market took a bit of a weird turn now. I think you know, I kind of welcome a bear market now just to flush all this crap out of the system. But but you can create a coin. Anyone can create a coin if you really wanted to. Doesn't necessarily mean that's going to have value behind it or that people are going to find it valuable.
It's all about confidence, right?
Yeah.
It's all about confidence, right?
Yeah, and there's a lot of speculative nature behind it still too. So, but yeah, it's confidence too. There's like I said, utility, because you can't really treat. So if you have a coin on a network, you can't necessarily treat that like a stock, even though some people do buy the coin like a stock. You can't necessarily treat it because you're not guaranteed any of the company's earnings or things like that. But a lot of people try to treat it like the company's index token or something. But, you know, there's also other companies out there who look to provide actual utility to their coin as well. So there's a lot of caveats to it.
Rob, you got anything else to add to that?
Well, I think it's always, you know, are we trying to put a shiny new wrapper on something that already exists and it's not really innovation? You know, are we truly solving a problem? You know, these are the kind of things that I want to see with, you know, blockchain and crypto development, you know, to really solve problems. Like I see, you know, for voting and things like that, and for insurance. And I mean, I see some great use cases, but it doesn't mean you can just, you know, crypto anything and suddenly you have innovation. I don't think you do. But I'm in agreement. I like to see this crypto winter kind of flush a lot of things out. And, you know, one day we'll probably have, you know, a global digital currency, which, you know, will have been facilitated by all of this development. So in one sense, all the community of innovators is working for, you know, the government ultimately to put in place something that they can monitor and control. And if you're not a good person, maybe we'll turn your currency off so you can't buy anything. You know,
that's scary, man.
This is a risk, right?
I want to talk a little bit. So we're going to keep moving because I want to talk about inflation, and then
Well, actually, on that theme, speaking of inflation, so scarcity is part of something to do with inflation. So, for example, you know, the definition, you know, of inflation could be said this way: too much money chasing too few goods. So, what is the problem? That's scarcity, right? No different than the housing there when there was no inventory from 2020 to, you know, more recently. Housing prices went up because there was so much scarcity. And the same thing in the crypto space is the use cases that have more of a limited supply, like Bitcoin, for example. You could argue that because of that scarcity, it could be worth more than other coins that have trillions of coins minted, right? So that's part of it, but also the devaluation of our dollar and our purchasing power. You know, in the last, what do they say, 30 or 40 years, we've lost over 95% of our purchasing power with the dollar. You know, that's what's really contributing to inflation as well, is we just have a decline of its purchasing power. And so it's not, you know, the inflation isn't being caused right now contrary to the legislators that say that it's price gouging by companies. That's not it. You don't see companies are really having to adjust with the whole supply chain squeeze, margins. You can talk to real business people out there. What are they dealing with?
Mm-hmm.
And they've had to adjust and raise their prices. I mean, they're not a charity, right? They're not in business to, make nothing. They have to adjust their prices, but that's certainly not price gouging. There's so much blame game. Like, blame this for inflation, blame that for inflation. Well, when you increase the money supply to the extent that you did and devalue our purchasing power, you got nobody to blame but yourself.
So do you think that you look at how much money that we have with just debt? They keep, we're putting $500 billion, I think, over in Ukraine and other things. And I understand countries need these things, but I mean, we just keep putting money out, and at some point, something's got to give. We gave out a lot of money for the stimulus. Okay, you got a lot of things happening there. Some people needed it, some people didn't. You got a lot of people so there was a lot of money put into into circulation when we already had a large debt. And are we starting to see where can they really sustain that or put a lid on this to bring it down? Or is it just going to say, you know what, this is the new normal?
It's not beneficial if you want to retain your job as a politician, right? Who likes austerity?
Mm-hmm.
Do the people really like austerity? Are they going to vote for somebody that says, hey, I'm going to fix it by shutting this down and that down and everything else down? People are going to go, no way, we don't want that. We want helicopters full of money. That's what we want.
Yeah, but they're not the ones pulling the lever and giving this money out, right? I mean, it's not let's say it's not the senators and the politicians. It's you know what I mean? Like, somebody has to be approving these things, which is Congress and president. And so is there something behind the scenes?
But it's not you and me.
Right. That's what I'm saying.
Are you approving anything? No, it's not the people.
Right.
This whole world has gone political. It's just about politicians doing what they want to do. Right. I mean, did you authorize sending, 80 million, then 800 million, then 60 billion?
No.
To these places like the Ukraine? Did you authorize that?
No, and that's what I'm saying. I agree with you. It's like, I don't know. For me, it's like this. It's like, well, you're just going to have to be a byproduct of what their decision making is, right? You're just going to have to follow whatever it is. And the problem is that, okay, you keep putting money into circulation. They keep giving options for people that, hey, put more money, give another stimulus. But at some point, something's going to have to pay for that. I mean, and I think we're seeing that. I don't know if there's a way for them to reverse it as far as this is, as far out as it's gone at this point within the inflation problem.
Look at Wall Street. Wall Street creates new products all the time that are for its benefit, not for the people's benefit. Correct?
Correct.
We see new products created, like, there was ETFs and there's leveraged ETFs and all these new products, and they can be used by the people, but they're not created for the people. They're created as ways to bring in more revenue into the firms that create them. Same thing with governments. I agree with Elon about the ESG. What was his words, to quote him? He said ESG labeling and all that ranking is a scam. So my point is,
what's ESG? I'm sorry, just for the people out there.
Well, it's related to your social, responsibility in terms of the environment, right? Sustainable and governance. It's kind of a multifaceted package,
right?
But they have ESG rankings for companies, and companies are pledging to be carbon neutral by such and such a date, and blah blah blah. The point, though, all centered around that is going to be huge elements of taxation, all the way through the system.
Mm-hmm.
So the government's going to create new ways to bring in more revenue to pay the bills. Just like a company will have to create new products in order to increase revenue or sustain revenue and pay the bills, right? So you're going to have more and more and more taxation.
So when does it end? I guess is the question. Because look, I'm thinking we're sitting a lot higher than the 8% or 8.5%. We're probably sitting closer to what? I mean, if you look at a real chart, 17, 18%, maybe something like that.
Well, it depends. It's going to be product specific. I mean, your nice, salad bowl or whatever that you normally get from wherever, used to be $9 is now $14 or $15. Like, that's significant inflation, right? I mean, your gas at the pump, right? How much has that gone up for you in your area?
Right, a lot.
So it depends. Different products, I see lumber futures coming down. So lumber was very elevated and it's starting to come down. So there are signs of some of these things working itself through, and that will continue. And so, here's how it works. If I'm in Africa, right, and cotton prices are really high, I'm going to take my fields and turn them into cotton, right? And so is my neighbor, and so is the guy down the street and everything. Everybody's going to be growing cotton. So what happens to the price of cotton? You got so much supply that cotton will start to go down in price, right? And now nobody's making any money because the prices, everybody planted when it was elevated, but by the time everybody's doing it, the price will come down. You're going to see that where there are some areas of this inflation thing. So it depends what the government has in terms of its criteria, because let's say, for example, there's a big demand on, TVs or something, and that's one of the items in inflation. And now all these companies go, well, there's such a big demand, let's produce, and they flood the market with new TVs. It's going to drive the price down. So in some areas, you can move from inflation to deflation very quickly.
Yeah.
But across the board, we have some serious challenges. When this word transitory was first used, I said hogwash, right? Not gonna agree with that. Now, as we've gone on in time, it has been shown that it's lasted much longer than the word transitory implied. But we're not out of the woods. This will probably continue into 2023, 2024. But again, not in every single area. Don't brushstroke it. There will be some relief in some areas. Because supply and demand is still there with companies.
So when do you think that this thing will start to get back? I wouldn't even say normal. Is this going to be the new normal though? That's the question. Like, do you feel that a lot of these prices are going to stay where they're at based upon the demand, the supply, and then everybody says dollars.
Listen, the world has forever changed, right? To a large degree. When you see somebody in their own car driving around with a mask on, right? You have to say, if you were to talk to them, you say, why? And they say, well, I'm quite concerned, right? Well, why are you wearing your mask by yourself in your own car? No one else is in the car. Well, I just feel safer. And, we can go back through every other crisis, whether it was 9/11 or this or that, and there was freedoms that were changed. There was regulations that were imposed, right? Patriot Act, all kinds of things. There's all kinds of things that get done that never get undone, right? So what are the things that have changed since 2020? And we're not going back. They're not going to be taken away in a lot of areas. And people have also been greatly affected by this, right? So the world's different, and we're not out of the woods. There's a lot more stuff to come.
Yeah, I agree. You guys got anything else to say? Because we're going to end the show here in a second. You got anything else to say, Matt, about crypto?
I mean, I guess the one thing that I would be doing right now in crypto, like if I was trying to get involved into crypto and I wanted to start learning more, the very first step is just getting started. Best thing that you can possibly be doing is take an investor's, mindset and just start dollar cost averaging. Dollar cost averaging is essentially just putting small sums of cash in maybe every other week. Every week if you're really good about it, every day if you're amazing about it.
Yeah.
And ultimately price doesn't matter. Whether it's up, whether it's down.
It's the long game, right?
It's the long game, right?
What about you, Jacob?
Yeah, I mean, I think that's a good way to end it too. I think I mean, if you're anyone out there interested in crypto, I would just research it too. You don't even necessarily have to invest. I think there's a lot of cool things going on. I think it's an exciting market to sort of immerse yourself into. So definitely I would, I'm trying to advocate more people to, not treat crypto like a get rich quick scheme, but, something that's very cool and you can see a lot of, innovation and development in it too. So,
and it's fun.
Yeah, can I plug my Instagram at all?
Plug it, man.
Sure. So I just made an Instagram actually. So it's Jake Har, JAKEHAR 25.
Okay.
And if anyone's out there listening, you can shoot me a message there, and I'll gladly answer any questions. So,
Rob, everybody needs to know how they can get a hold of you if they want to.
Oh, me?
Yeah, you. I want to see if people can call you.
Rob at mystockodds.com. mystockodds.com.
And why would somebody reach out to you, Rob? Because people want to know a little bit, like, what you do and just really concise.
So we have a alternative database, alternative data, and so we produce a lot of odds and average performance metrics for basically all the listed stock. And so we have education on how to trade, how to be hedged, different techniques and things like that, as well as all of these data sets. So it's a really great place to learn how to be a little bit more sophisticated than just, I think I'll buy something and somebody else said that, hey, it's a good idea, I'll do that. It's just a way to learn about how the markets work and, how you can be involved. And it's no different than even in the crypto space. There are so many swapping mechanisms now that if you have a concern with a particular holding, maybe, you're in Link or something else and you see some concerns, you can move it to US dollar coin, USDC.
Yeah.
And in a sense, preserve your capital. So there are mechanisms now that we never had back in 2016, 17.
Mm-hmm.
Right.
Yeah,
absolutely.
So I mean, I like the innovation. I like the opportunity. And again, it's really about, you have to take some time to understand your money and your brain. Like, how does your brain work relative to investments? How does it work relative to fear or greed? How does it work relative to opportunity? Because the way I say it is, when opportunity is in the room, probability runs out. They both can't coexist. We tend to be blinders on when we see opportunity and forget about the probabilities. So really be research based. And I'd like to hear from the guys before you close. Where can people go? Because there's so much noise on the internet when you start Googling and start searching around. Where would you recommend people go to learn more about how to really research some of the different coins that are out there?
That one's a really tough question.
So
I'm not even gonna lie.
So it depends entirely what you're looking for. So if you're a stats guy, I guess there's a website called Webull that offers a lot of good statistics just off of like wallet analytics and things like that. And if you're researching just companies, honestly, I would stick with
Discord.
No,
I mean,
no,
honestly,
I would stick with.
Discord.
I mean, if you want to get like a really technical deep dive into some of the networks, I would stick with the white papers, and some of them can get really technically heavy. And if you're reading a white paper and you get stuck on what's going on or what does this verbiage mean, maybe go and research the verbiage yourself, or maybe try to get a better understanding of what's being said in the white paper. So
right. And I've talked to a lot of people that are actually trading crypto as well. I've done some myself, but there's a big difference between how many people follow and what the real liquidity is.
Mm-hmm.
Your trading action on that is a lot better than some of these things that are on fumes, right?
All right. You got anything else to say on that? No? All right, guys. So thank you guys so much for tuning in on this Thursday. We're going to continue to keep putting out Thursday content, and we're going to talk a lot about what's happening in the markets. Keep here with Rob. Rob, thanks for coming on. Appreciate you so much, man. You got a wealth of knowledge. To Matt, Jacob,
Absolutely.
guys, thanks for coming on.
Thanks for having me on.
Appreciate you guys coming on. You guys know the channel, right? Subscribe, like the channel. It's the most real and behind-the-scenes information on financing, real estate, money talk, crypto, and entrepreneurs going on here in Las Vegas. I'm your host, Dan French. I'll see you guys at the next one.
Thank you, Dan.